Peter Rose, Longwood Currency Trading. It's middle of March 2021, and there's a series of events have occurred that has brought to light the real importance of understanding the law of large numbers and having a body of work, trading body of work, that enables you to look at the law of large numbers in your own trading. And I'll just preface that with what's gone on in the last 15 days or so. I talk a lot about when you trade a lot, you run into these 6 losses in a row. You could also run into 6 winners in a row and all that sort of stuff. And that's really on a transactional type basis that you can calculate those types of numbers within a reasonable time frame. If you're a day trader like I am, and you're running out anywhere from 3 to 20 trades a day, you can hit, you need 100 trades in order to determine what your win-to-loss ratio is, and to stumble into some of that statistical likelihood of happening. You really need out to about 300 trades in order to get a much better sense. Your sample size at 300 transactions is much more viable in looking at the law of large numbers in trading than just 100 trades. So if you're a long-term trader and you're doing maybe a couple of trades a week or something like that, maybe you're doing multiple currency pairs or stocks or whatever, and so maybe you're trading every day, but the position itself will go for a couple of weeks or months or whatever. In any event, you don't want to throw too many things into the mix when you're trying to find out what your trading is when you're a beginner. When you're more advanced, you can do stocks and commodities and currencies and old tires or whatever you want to do, because trading, it really boils down to trading. But when you're learning, I think you need to pick, and this is a currency trading channel, so you need to pick one currency pair and work with that until you have about 300 transactions, so that you can kind of get your statistics, lined up. So in the last, again, as I'm a day trader, and that means that day trading and scalping are kind of synonymous. And yet scalping is when you're running 20 or 30 trades a day out, or 10 trades, 15 trades a day. That's a lot of trading. But it does allow you to, in a short period of time, if you've done this over a long period of time, you know what your win-to-loss ratio is, you've quantified your risk, and you know about how many pips you're going to win when you win, and you averaged all that stuff out. I've done videos and blog posts where I actually go through the calculations of how you do this. Regardless of that, if you've done a lot of trading, you have those statistics. So it's a lot like stepping up to the poker table and playing one hand and saying, oh, okay, I won that hand, so I'm pretty good. I'll play another hand, and I win that hand, and that's pretty good, and then I win the third hand, and yeah, I know what I'm doing. And then I come back to the poker table the next day and I have an expectation of winning. You don't have a large enough sample size to say that, because you're not going to win every time. You're going to lose a certain percentage and you're going to win a certain percentage of times. When you have traded for quite a while, then your win to loss doesn't become on a transactional basis. You go by days of trading. If I have a 3 winning, 3 losing days out of 10, then I've got a 70% chance on a daily basis that I'm going to come out ahead. So you can expand things out until you get your multiple years. You can say, well, I've been profitable 70% of the months. And so therefore, I have that expectation that even though I might have a couple of months where I'm losing a horrendous amount of money, on average, I make 3% a month or 30% a month or whatever the hell it is that you're doing, and you can calculate how many months of profit you need to make up for the months that you know you're going to lose, so that you can kind of calculate out over a year's period of time what your net is going to turn out to be. This is the importance of understanding the law of large numbers and understanding what your capability within that law of large numbers is going to be. So in me looking at the last 8 or 9 trading days, I've encapsulated both ends of the spectrum of wins and losses, because and it isn't so much that I'm doing 10 trades a day. I think over the last 9 days of trading, I've done on average 2 trades a day. So I'm not exactly ripping it up as a scalper, you know, just being very very careful. Now, I've done staging, but those don't constitute different trades. They're trades that add to a position. So if I go in with one lot and have an open position and I add another lot to it, that's a transaction, that's a trade, but it's still one position. So the scaling factors are not factored into the number of trades. You wouldn't say, well, I made 6 transactions over one position, and then say, well, I've got a sample size of 6 trades. You can't do that. It doesn't work that way. You gotta close it down. It's like, oh God, I keep forgetting her name. I think it's Liz Chevelle. It's one of the turtle traders had said that you know, trading is really cool because at the end of the day, you've either won or lost. There's no conversation about it. So, you know, and you have confidence of kidding and kibitzing like that when over a long period of days, you can say, I've come out ahead, or I've come out you know, behind over that period of days. The daily fluctuation in the number of trades that you take during that day, one of those trades might go, you know, might take your account down 8% during the day, and then you get back in and you grind it out and you make 9%, and so for the day you're up 1%. So that's why a lot of the experienced traders can have long runs of profitable weeks of trading, and that isn't making an excuse for them. That's a huge factor, because it means that at the end of the week, every week, you've got to be profitable. If they do it on a daily basis, oh, I've been profitable for the last 15 days, or 500 days, or whatever it is. I mean, you really have to work to make sure that that works. Now, you make $1 for the day, you're profitable. So if you're trying to do a record, you can trade very, very, very successfully, making $1 or $2 for the day, so that you can say, I have this tremendous track record. You know, I haven't had a losing day in 12 years. You know? Well, you're not taking any risks. So if you're not taking any risks, you're not making any gain, and you're really not working on the law of large numbers. And the law of large numbers says that when you are in a positive run, push it. When you're in a negative run, back out. Now, it's just the opposite in backgammon. If you play backgammon, you know, you can play a game of backgammon in 10 minutes and you're on. My wife and I play 2,500 games of backgammon a year. So you'll see long runs of her winning, and you'll see long runs of me winning. I haven't added it all up as to where it's at. I've been playing backgammon for 30, 40 years, and she's been playing for, I don't know, 8 years or something like that. And she kicks my ass on a regular basis. I think we're trading off back and forth pretty good. But one of the factors in playing backgammon is when you're ahead, you just grind it through and you try to get your checkers around the board, and you don't want any conflict because you're ahead. When you're behind, you shoot the potatoes. You go and you try to get hit, and you try to recycle your checkers around, and because you have nothing to lose. You're losing. So it's 1 point if you lose. If you lose badly, it's still 1 point. If you lose and don't get any of your checkers off the board, you lose 2 times the score. It's called a gammon. And if you get really jammed up and you get one of your checkers caught in the opponent's inner board, or you're up on the bar, then you lose 3 times the score. So the worst it's going to go for you if you just sit there and pick your nose is 3 times whatever the bet is. Okay? So when you're losing, you have nothing to lose by just jacking it in there and just going for it. So the guy that's trying to play protective gets, wow, holy crap, I got guys all over the place. I can't help but to hit him. Well, as soon as you hit him, you send him back. It's like in Monopoly. You go back to go, So it's different in the trading world, in the financial world. When you're behind, you don't act crazy and you don't go pushing the envelope, because your losses can be unlimited. Well, they are limited. When your account gets to the wood, you're fucking done. Okay? But your winnings at that point are unlimited, right? You have to understand the rules of the game that you're in. And that's why it's so, so important that you understand the law of large numbers and how your trading fits into it. If you're starting your trading, you need to do it on a transactional basis, on a trade-by-trade basis. You need to try to figure out, when I make a trade and I go in there, and again, a trade could be multiple trades creating a position. But when you close a position out, that's what you count. You need to know what that is, because you don't have a great body of evidence. And that's why I say when I'm teaching somebody, you may not have a day trader's mentality. You may not like that. It might make your roids flare. You may want to trade up on the daily chart or the 4-hour chart or whatever, and be an investor or a long-term trader, a long-term position trader. But it doesn't matter. But if you're going to learn from me, you're going to learn to trade down on the 1-minute chart to start, and then down the 5-minute chart. You're going to learn to be a day trader, because what we're interested in doing is process. Once you understand the process of trading and you've done a tremendous number of trades, 300 isn't going to be enough for you, or 100 anyway, certainly isn't going to be enough trades for you if you're a beginner, because you don't know what the hell you're doing when you start. You should be losing a lot, because you're not going to learn anything unless you lose. What are you going to do? What are you going to learn if you win? Now, I got a story for you on that too. What are you going to learn if you win? You're going to learn nothing. So when you run into the statistical 6 losses in a row or 13 losses in a row, I've hit that before, you won't know what to do to work your way out. You won't know how to handle that, and you'll lose and you'll lose and you'll lose, and you'll try to revenge trade and you'll try to get back, and that's where I come into play and say, whoa, wait a minute, stop fucking trading. Look at what you're doing. Why are you losing? What's the problem? Are you doing a bad entry? Are you misjudging where your stop should be? Are you misjudging the amount of profit that you can get out of this? Is your stop too close for the ATR of the position? Are you relying on fundamentals when you should be just ignoring all that stuff? The idea is to gather a large number of trades so that you can figure out what your process is and what you're good at, because you can take that short-term stuff and now map that up into the longer term. You can't just do it by yourself. You need somebody to show you how to make that transition, just like you'd have to have somebody show you how to make the transition from the first level high diving board to the second level high diving board. You can just go up there and backflip off of there. You're going to have some advice on how to do that. So in the last 9 days of trading, I took some horrendous losses in a row up front. And I did try to revenge trade and try to get back because I know I've got a good win to loss. And I just figured I can push it, I can push it. And that's the wrong fucking time to push it. And I'm down, I was down, well, I took some big chances when I shouldn't have and ended up being way down. And had three losing days in a row, big losing days, thousands of dollars losing days. And I stepped back from that and I thought, whoa, wait a minute. What are you doing? Number one, I was getting in at the wrong time. The trade entry was off from a timing standpoint. The idea was right, but the timing was off. And I'm trying to make the money back. Let's forget that. Let's just stop for a minute. Let's take the position size that I'm trading and let's drop that down. And then and let's see if we can figure out how to work this back. And so we're more than 8 days of trading into the month. I took a couple of days off just to chill it out, to calm it down. Stop that shit. I've had 5 trading days in a row now where my average win's about $600. I just did an $800 day today. So now, we got to look at that and we got to say, has the result of making $3,000, that's about $3,000 in the last 5 trading days, has that been because I'm statistically due for 5 or 6 winners or 3 winners or 10 winners in a row? Or is it because I've changed the process to that of what I know I'm supposed to be doing, and I've got a handle on what I'm doing? What is the differential? One of the discoveries that I made is something that I harp in every video, is to, as soon as the price goes against you, get out. It's a short stop. Get out. Don't let it run to figure out later that you're wrong. Get out. That's what I did. Every time the price went against me, I'm gone. Now, because I'm trading with some heat, obviously there's a lot of dollars involved in just the get out. But what happens when the trade goes in my favor is that I'll stage in. And when it continues to go in my favor, and that's very short after that, I'll double that position. Now, and I'm going in with some heat. So I do a little bit of stage to see what happens, but if it goes in my direction, I want to get my position in there right away, because my profit targets aren't 50 pips away. My potential profit target should be 20 or 30 pips away, say 25 pips away, because I'm seeing that I've got 25 pips to some structure or price action or whatever. Like the little juju beads are telling me that I got 25 pips. Okay, so I don't want to stage in so that I'm putting my double position on at 15 pips, because I'm not going to get to that 22 pip point. I have to be careful about that staging, because as price is moving up toward this theoretical 20 pip profit target, what's the likelihood that there won't be a zone there? Let's say I'm going up and I'm trading toward a resistance zone that's 20 pips away, or you draw a line and it's a line. Yeah, it's 20 pips away. Well, we know that zone could be 5 or 6 or 7 pips on either side of that line. So I'm losing 5 pips right away. So now I'm going from 20 pips to 15 pips. Do you think I want to be staging in and doubling my lots at 13 pips? I don't want to do that because I'm not expecting that I'm going to even get to the 15. I'm expecting and trying to get 13 pips out of that 25 pip run. That's what my expectation is. So that 13 pips is 1.3 pips, 1.3% per $1,000. Okay, so that's a good run. And you make 1% or 1.3% on your trade, you're done for the day. You don't have to trade again because you don't want to push it because that's a good trade. So if I'm going to load up, I want to load up really early. So I'll go in with a preliminary trade just to make sure that it's going to continue to go in my direction. I'm going to load in a little bit more, and it's going to go in my direction, and then I'm going to go for this shit. I'm going to pile the potatoes on. So if the price then turns around and goes against me, the heat that I've put on has very little loss in relationship to my earlier couple, and then I'll just cut the trade and go. I'm always going to cut that fucking trade until it really continues to go. That's what I've done over the last 5 days that's enabled me to be successful, I believe. Now, in 10 days, maybe I'll report back and say, oh, geez, I had a couple of really bad... Well, those couple of bad losses shouldn't be bad losses if I'm cutting early. They'll only be bad if I don't cut. Well, the other reason they could be bad is because I didn't get my trade entry process right, that I don't have 25 pips, that I misread the price action, and there's no way it's going to go up. A price that's fallen like a rock for the last 2 15-minute bars. I mean, that isn't a short opportunity. That's not where you want to get in a short. You want to just sit back and say, whoa, are we going to have a retracement of that for a while? Is there some big institution that's doing this, or is everybody, all the retail traders in the world, just giving up? What's happening here? I don't want to be in that. So please understand the importance of this law of large numbers so that you can develop your set of trading metrics, and that will give you the confidence to go in and get out of the damn trade if it's wrong. You know, if you do it right, you can lose 3 times in a row and still make a shithouse full of money on that 4th trade. Yeah, it might take you 5, but if you do it right, you should be able to. Look, if you just make it on a simple basis, if I'm on my, you know, I harp all the time about my 8-pip hard stop, but I'm dealing on a 5-minute chart with a 5-period ATR, so I got an 8-pip stop. Okay, that's 1.5 ATR. If I take that 8-pip stop 3 times, what is that? 8 times 3, 24. I've lost 24 pips. Well, first of all, I'm not going to lose it 3 times. I'm going to lose it once, and then I'm going to say, well, that isn't a trade to make. I'm done for the day. Or I'll just wait until a better trade entry happens. I'm not going to fucking lose 3 times in a row. But let's say I did. It's 24 pips. Okay? 24 pips. So how much do I have to make on the 4th trade to make that up? 24 pips to come back to break even. If you pick your trade entry the right way and you stage into that, remember, I'm going in with, let's say I go in with 2 lots and then I add 2 later, and then I double that position as that moves in my favor. So I've got the 2 that goes in. So I've lost 2 times 24, I've lost 8 pips with 2 lots. Okay, so that's 16 pips that I'm losing times the number of times I'm going to hit, 16 times 3. Now I'm up to 40 some odd pips that I've lost. But when I go in and I hit my 15 pip stop, if I hit that with 2 lots, I've made 30 pips. That's almost the thing there. Well, you're going in with 3 or 4, now I've made 40 or 50 or 60, and I go to, and I make that 20. That's how you make it. That's how you trade. You push your winners and you cut your losses. I know there's a lot of emphasis to give your price room to breathe. And again, there's a lot of validity in that. I'm not slamming that. I think that as a beginning trader, you can't set a short pip stop loss. You can't, because you don't know what the fuck you're doing. You're going to lose. You put your pip stop at 8 pips or 10 pips or 15 pips. You're going to get hit because your trade entry sucks. You probably only have a 1 in 4 win to loss. You're going to take 3 losses or 4 losses for every 1 you win. You have 20% win rate. So the 4 that you lose, they better, you don't want to be down in. I mean, if you set a 10 pip stop and you lose that 4 times, you're 40 down. So if you are doing short-term trading and you set your loss to 30 pips and you've got a profit target of 20 pips or something, or 15 pips or whatever that is, yeah, your win-to-loss ratio is upside down, but the likelihood, if you try to make sure that your entry is right, the likelihood is that you won't hit that 25 or 30 pip stop, that the price will go down against you 10 pips or 15 pips, and it'll chat around, and then it'll go back up. And look, as it goes back up, if you want to get daring, you can add to that position on the way up, and that makes that position go. But again, as a beginner, I advise you to set a long stop and trade with 1 lot, whether that's a mini or a full. I trade with a mini, 1 mini, and I wouldn't do any staging. I'd just get your process down. But I guess the critical thing that you need to know is the law of large numbers won't manifest itself within you until you have traded a whole lot of times. So you better trade with very, very small weight, and you better be very, very rigorous about taking your loss, because your loss taking is the only thing you have control over. You have no control over how much you're going to win or how many times you're going to win. But you can control the losses. As your skill increases, your winning trades will increase over that of your losing trades until you develop that win-to-loss ratio, the metrics that you're going to gain from that win-to-loss ratio, and find out what your edge is. Your edge is a combination of the win-to-loss ratio as a function of the amount that you lose when you lose, as opposed to the amount that you win on average when you win. Now that gives you your edge. So over 100 trades as a beginner, that's not enough trades to develop a win-to-loss ratio, because 50 of those trades in the beginning were just crapshoot. You were 50-50 jump ball, if that. It's probably 70% against you when you start trading, unless you've had somebody mentor you. If you just jump in after reading a book and watching a bunch of fucking videos, your win rate is at best 20%, because you don't have any clue. You got some jackass telling you to move, that when a short MA crosses this, that you go in, and then you crosses down, and you go out, or you can Bollinger fucking Band, or whatever the hell crazy shit it is that you're seeing these folks use. Some of them are successful in using this stuff, but they don't use that particular thing as the thing that they use to trade. They use their experience and all the other things to do to determine when to go into trade. You can't do that because you don't have any experience. So you got to be very, very careful about what you do, so that after you've done 300 trades, the win-to-loss ratio that you establish and your edge is valid, that it works. If you're just trying 4 or 5 different systems and you're doing this and you don't have anybody that's really pointing you in a direction and showing you what to do and making you be very rigorous about it, you will have shitty numbers. And look, if you put shitty gas in your car, it'll run, but it ain't going to run very good, and eventually it'll corrupt the engine. Yeah. So if you do shitty trades, you're going to win some and you're going to lose some, and after you've done a whole lot of trades, maybe you've ended up winning a little because you run into that statistical likelihood of maybe 8 or 10 trades in a row that you win, and that now you know what you're doing. Now you fund your account with a lot of money. Maybe you put a $30,000 account in there, and it goes out like shit through a goose because you really don't know what the fuck you're doing. That's the trouble. The advantage with the currency markets is you can make a shit house full of money as long as you take care of those losses right up front and you know what your expectation of win rate is. You know those two things, you're in great shape. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.